Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. We're recording this late Friday morning, September 27th, almost October. It's been a pretty quiet week from a top-down perspective. I have seen some churning and some selling on strength in the growth arena with some of the high relative performance stocks, but it's not a total surprise. It's kind of a sloppy time of year. I'm not a big seasonality guy, but a sloppy time of year. We've obviously had some big moves in some of these stocks, so nothing abnormal, just a little bit of softness under the surface. Stepping back, I think my opinion really hasn't changed over the past couple of weeks. I think most of the evidence is positive, whether you're looking at intermediate term trend of the indexes, even some growth measures. A lot of individual stocks look pretty good, that sort of thing. So we've been doing some buying. At the same time, I wouldn't say that the evidence tells you that, Fidelity and T. Rowe Price and all these guys and gals are, buying hand over fist day after day after day. It's not a runaway type market. It's positive, but I wouldn't say it's powerful. And there's still like a defensive flavor to it. The Dow is outperforming the NASDAQ and just stuff like that. And just from a student of the market perspective, a lot of good news has come out, right? The Fed is cutting rates, which is a big picture positive, don't get me wrong. But people are kind of excited about that. China unleashed a lot of stimulus this week. But if anything, I saw sort of more selling than, not in those stocks, but more selling than buying across the broad tape this week. So, elections coming up, that sort of thing. So we've been doing some buying, but we're picking our spots, holding on to what's working, which is a lot of stuff we own, thankfully. And just thinking that the path of least resistance is up, but I'm not quite sure, it's go time where it's like, oh, geez, if we don't buy this week, we're going to miss out on these 5 or 10 stocks. I don't think we're quite there just yet. In Cabot Growth Investors Model Portfolio, like I said, we've been doing some buying, but we still have about 30% cash. The stocks we do own, we really like. They're doing very well, thankfully. But we held off buying this week, honestly, just because I did see some of that churning. So maybe some of these things can exhale a little bit, provide some better entry points, or we can just see how they pull back. Maybe they really fall sharply or whatever. Just still seeing a lot of stocks that are doing well, but not, really going nuts on the upside. We're seeing a lot of indexes still kind of within trading ranges and testing resistance, that sort of thing. So definitely just kind of getting into the market's waters, but sort of stepping into it as opposed to cannonballing into the pool. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's the NASDAQ, and this is just kind of what we see. Is it above its moving averages? Yes. Is the intermediate term trend by our definition up? Yes. And that, those are the most important things. Is it, whatever, I don't know how far, but is it 3% or what, very close to all-time highs? Yes. So all that is to the good, but it's also, below its highs. There's some resistance here. There's been some selling on strength, that sort of thing. And we're just seeing a lot of that, not a lot, but a decent amount of that in the market, which just tells us to, pick our spots a little bit and not go wild. Overall, the intermediate term trend is pointed up. S&P 500 new highs, New York Composite, which is kind of like the unweighted S&P 500 sort of thing. That's new highs. Small caps are still not quite there. Mid caps are still not quite, I won't say not there, but just kind of at their old highs. So again, it's just when you look at this chart, is it above the moving averages? Yes. Is there anything wrong with it? No. Could it be setting up for sort of a big base on base breakout if you're sort of an IBD person or whatever? Yeah, maybe, I'm all for, the Fed's cutting rates. But we're just seeing a lot of stocks that look like this, which is good, promising, good stories, good reaction to earnings, but not like, oh, geez, I got to remortgage the house and just put it into these 2 or 3 stocks, okay? And if you just kind of look around in the growth arena, as we say with the NASDAQ, this is the IBD 50. Again, positive, but not, powerful. If you want to look at the IBD 85, which is a little higher quality, I think. Again, positive, actually tagging new highs. So nothing wrong with it, but kind of where it was a month and a half ago before the late July, early August sort of meltdown. The IBD, not to do all the IBD indexes, but the IBD mutual fund indexes are real money mutual funds. So this was kind of the late or the mid-July peak. And, I'm not saying it's trending down, it's trending up, it's above the moving averages, but kind of more, range bound sort of thing. And then, of course, this is the DIA, which is the Dow Industrial ETF, right? Looking good, new highs, can't argue with that. And this is a good thing. I'm not trying to say the Dow going up is a bad thing. The Dow going up is fine. But, then you compare it, of course, to the QQQ, NASDAQ 100, different ball of wax. We're also seeing it. I don't want to make too much of this because this is. I don't want to make it. I think the action of individual stocks is definitely more good than bad. Definitely. That said, there is still some of this. What I call sort of. I shouldn't say hero to zero because that makes it sound like terrible. But here's like ServiceNow, which we still have in like top 10 or whatever. You can see it has this big multi-month base. Tried to break out. Market wasn't ready, and then it just kind of ran on the upside. And then this week, some news came out, to be fair, kind of it's a whole story. FBI raided a partner or something. But you can just see it's kind of, a pullback is one thing, but it's just kind of come right back in. It's above the 25-day line. I'm not trying to make too much out of it, but it's just kind of, you'd like to see it sort of run or just tighten up here and then go, that sort of thing. So just something to watch. Halozyme is not a big liquid leader like ServiceNow. And bigger picture, it looks okay. I mean, the breakout was here. So, I mean, this pullback of late in HALO is not the end of the world. But you're just seeing a lot of this where the stock looks amazing and you're like, ooh, let's try to get it on a pullback. And then it pulls back and just breaks the 50-day line within 2 or 3 weeks. There's some of that still going on, which just tells me, again, it's not a bear. I don't see any of these stuff that I'm saying, like the indexes are, hitting resistance or whatever. I don't see any of those as red flags. I just see it as a sign that, like I said earlier, it's not like the institutions are like last November, December, where it's like, we got to buy, and if, there will be no pullbacks basically because we need to get invested. I just get the sense where it's like you see some of that in certain stocks for a week or two, and then there's an exhale here, which makes sense given that, again, the good news is out, the election's coming up, stuff like that. Okay, so we'll see how it goes. Now, I will say that I'm nothing if not flexible. So this is the unweighted, equal weighted NASDAQ 100. And I've shown this before. It's kind of hard to see on the weekly chart unless I blow it up, which I'm going to try to do. Yeah. So this is the weekly chart. And you can just see the 90 level ballpark, 90 to 92, I guess, has been kind of a cap here since going back to March, something like that. It did get above there in July for a week and a half, boom, right back down. And now it's kind of testing up here again. So if a lot of these stocks and indexes like this, like the mid caps, right, and more importantly, individual stocks look like this, and they start really just, we come in next week and it's like boom, boom, boom on big volume. Yeah, don't get me wrong. I'm not, I could change my tune pretty quickly and put a lot of money to work, I think, pretty quickly. Not all in 1 week or anything, but so it's not that far away from it. I just think right now we're still seeing sort of, like I said, some, chip stocks look bad. Then the next week they look pretty good. The stuff that ran, that pulls back. It's just one of those sort of environments. That's all I'm trying to say, okay? Now, on to individual stocks. There's a lot, like I said, there's a lot to like, and it's from a lot of different areas, okay? So this is like Eagle Materials. Obviously, this is more of a building, construction, a little bit of infrastructure play to it. I like this EXP. It's a little bit of a thinner name, but not really. It's a $300 stock, so it's not too thin. But a nice volume cluster here after really a multi-month, just sloppy period. You're going to see pullback and all this stuff. Let me change the scale back. Okay, so it's just been sloppy, 200-day line, up, down, but looks like it's trying to get going. Here you can just see nice big volume here for a few weeks off the lows, and then after the next pullback, another couple of big volume weeks. And now it's tightened up here. That certainly looks pretty good. I said XAL. I don't even know if you can do that. Can I do market surge? Okay, this is the airline index. I'll just mention like one. But, oil prices have come down. The Fed is cutting rates. Economic hopes are higher. China's stimulating the hell out of things, apparently. And you just see in the airline group, which doesn't really, it kind of dances to its own drummer. It just kind of goes from, this is an example of going from zero to hero. But we're seeing some strength here. I'm not sure I'd be chasing airline stocks higher, especially if oil prices bounce, but maybe you do get a shakeout or some sort of consolidation that turns it into a structure. More on the growth side of things, I wouldn't say, so this is GE Verona, which is technically alternative energy and stuff. It's really more of the electrification play. There's some wind in there and all that. It basically built this structure. You can see there's a lot of false starts, and now it's really let loose on the upside. Big liquid name. Again, this is kind of one of these things where, say, we do pull back and say the market doesn't fall apart and say this stock doesn't crater, 30 points in a day or whatever. You get a kind of a shakeout here or a week or two consolidation. That would be interesting. There are some of these other power plays like Constellation Energy. I think this is the one that signed the deal with Microsoft to do 3 Mile Island. The power plays on AI and whatnot. just be aware with some of these, they're, you're not early, just like a lot of the chip stocks and stuff. You're not early on it, doesn't mean it won't work, but at this point, I'd rather be looking for something that's a little bit fresher. In the rate sensitive stuff, we've seen, I forgot to mention this, my apologies. I meant to mention this in the first section. So the Fed cut rates here, and this is the TLT, which is the bond fund. Let me just make it this. This is the yield on the 10-year note. The Fed cut rates down here, and then rates, 10-year rates, long-term rates, treasury rates, actually popped up 20 points. Not a huge deal, still within an intermediate term downtrend, but that has weighed on some rate sensitive stuff, which could look, kind of buyable to me. This is DR Horton, which to me is probably the best looking home builder. Again, you're not going to get rich off home builders, but kind of an ascending base here of sorts. Above the 50-day line, rates have popped up. People probably bought in anticipation of the Fed, sold some of that off. Okay, that sort of thing. But that looks pretty good. Redfin is a hot potato. This is low priced, less quality. But if the sector is turned up, some of these things can get going. And there has been some call buying, from what I hear, in some of these lower quality names. So I'm just putting out Redfin, RDFN. Real company and everything, real sales, no earnings yet, but you can see the stock's really accelerated higher and is in a nice little pullback here. Sort of on the delivery, I'm not going to say it's a theme, but Instacart, which is Maple Bear, C-A-R-T, but they run Instacart. Again, new merchandise. We mentioned it before. It had this run, and these IPOs can take a while. That's one thing that's frustrating about IPOs. But kind of had this nice base, wasn't too deep, built it, and then some nice, volume acceleration on the breakout attempt last week. Again, you're seeing one of these where it's like, I don't know. The buy point was probably down here, but the point is you ramp up and then it's kind of gives up maybe half the gain pretty quickly. So we'll see how it goes, but so far so good, certainly on that. DoorDash, sort of the same thing, DASH, kind of a little breakout here to this big base. I don't know if you want to call it a cup with handle or whatever. And it's stretched up here and looks pretty good. Okay, there is some very old overhead back from pandemic days, but I'm not too concerned about that. So overall, that looks good. I've mentioned this before with the volume clues. Some networking, so some chip stocks I mentioned. I don't want to go on too many tangents here, but so chips, this is SMH. They just still look like they need time. It's just they're not really able to get going. If you're looking for a downside risk in the market, or at least for growth stocks, maybe chips have sort of a sell-off here. I know there's some good news this week on earnings. But networking is interesting. Some of the AI stuff has come back. Arista is funny because it's it's had a big run, but it's had every opportunity to kind of, quote, die or have a 30% correction or whatever. And it really just hasn't. And their best growth for the AI stuff is still ahead of it. So it actually ran all the way to new highs here. It's pulling back the last couple of days. Again, there's been some churning this week in some of the growth stuff, but that looks pretty good. Coherent is a newer name. We had this in top 10. Nice breakout. It's off to a good start. Kind of wild today, but as I record this anyway. So we'll see what happens, but so far so good. There's some other networking plays that look pretty good. Bull market stocks, I've mentioned a lot of them before. This is Robinhood though, which I really liked before we got wiped out of it. We can't hold down during that August wipeout. It got all the way down to $14. Excuse me. But it has come back and, just has been acting sort of constructively and sort of tightening up here. I don't really know what to do with it. I'm just sort of bringing it to your attention that this whole sort of thing, if you kind of take out a couple of these wild days near the low, it kind of looks like a big consolidation between, 19 and 25 or whatever. And now the stock is maybe trying to attack the highs there. I can't get out of here without mentioning a couple other things. So this is China, stimulus, big news this week, probably the biggest sort of financial or economic news, I guess. So I've gotten some questions about it. And we'll be running our screens for top 10 trader for Monday. But this is FXI, which is just obviously sort of the most popular ETF. You can see the volume on it this week is kind of out of this world, whether that's good or bad. I'll let you decide. But certainly kind of after years of being in the doldrums, China's coming to life. And you could pull up Alibaba, you can pull up JD, you can pull up whatever stock. They all look pretty similar. I don't have any deep thoughts on China, except to say that it's been out of favor for years. The weak hands, I would have to imagine, are out of it. Every hand is almost out of it. So I definitely think this has a chance to work, whether it works here, whether there's another few months of consolidation. I have no idea yet, but just definitely something you do want to flag and be open to, even though we know the issues over in China, but certainly the stock action's interesting. And last but not least, I just want to flag Bitcoin. Bitcoin, I can't really show it. This is IBIT, which is an ETF and actually holds Bitcoin, one of those. There was a bigger run back here, I believe. So it's had kind of a big run up, and now you've just had sort of this almost 3 waves down correction. And now Bitcoin's starting to perk up. Is this like my highest conviction trade? No. Or highest conviction idea, I should say. No. But, we know that this thing can move. We know that it's had, right, like a lot of growth stuff. It's been consolidating since March. I showed you that chart of the equal weight NASDAQ 100, very similar. And, it's just been kind of slightly lower lows here, but now it's a little bit of a higher high. And obviously, if it could take out 40 or 42, that would be a good thing. So just flagging it, being open to some of those possibilities. Back to the market, all I can say is I like what I see. But again, I'm not sitting here saying, geez, I got to go put the rest of my money to work and be super, super aggressive and chase things higher because they're not going to pull back. I don't really feel that right now. I hope I'm wrong, and I hope I come in next week and there's a ton of things breaking out, and I will buy those, I will buy those in size. But at this point, I think I see a lot of stuff that acts well. I see a little stuff that's a little bit fluffy up here that might want to pull back. So let's just see how it goes here in the days and weeks ahead. Overall bullish, but picking our spots and stocks carefully. Okay, that's all the time I have for today. Thanks for listening and watching. Be sure to come by again next week for another Cabot Weekly Review.